What's going on, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It's September 22nd of 2022. Let's take a look at all these headline indices. We're going to go through this pretty quick today. I'm actually still at my parents' house just for a few more days. They're watching a movie 2 feet away from me. Let's take a look here. We're going to go through the indices and we're going to talk about why this isn't all bad right now. I see a lot of emotions out there in the market. They're fully on display. And let's take a look here. We have the S&P 500 is down 0.84%. We have our NASDAQ QQQ, which was down 1.23%. We had our small caps, which caught down to the rest of the indices that were down 2.25%. Our Dow Jones was down 0.43%, and our ARK Innovation ETF did get hit, down 4.29%. We had some washout levels of breadth. We had the trend model still at -1. Of course, our up volume was very low. My apologies if you hear this like movie playing literally like 2 feet away from me. Anyway, back in PA in a couple days. God bless America. Our economic data, let's take a look here. We had initial jobless claims come in at 213,000 jobs. The consensus was 218,000. And I think that's been one of the major problems for the market. These market participants so desperately want a recession. Inflation has been a huge problem, and the Fed is basically trying to induce a recession in order to solve the inflation problem. It's very silly, but that is what they're doing. It's kind of crazy. And so every time we get a data point that just shows, U.S. economy is still strong, then the dollar just strengthens and everything gets very, very weak. Keep in mind, tomorrow we do have Chair Powell that is going to be speaking at 2 p.m. Yeah, it's kind of hard for me to concentrate right now, all this noise, but take a look at this. I prepared like a couple slides just showing you, why I think there could be some upside in the market. Look at this. This is from Sentiment Trader. Mom and Pop have given up. And this is an indicator that I look at every single weekend. We go through this in our Pristine Capital weekend market analysis video. This is the sentiment survey for retail investors, and it has gotten incredibly pessimistic. Pretty much every time it gets this pessimistic, that is typically at a local market bottom, not at a top. And I know it's pretty crazy when the market goes down like this, it tends to feel like it's the beginning of something that's never going to end, right? But that is not the case, certainly. Like, we're on today was day 26 of this sell-off. You can see the VIX Futures Term Structure, it is inverted. Really what that means is we're in the eye of the storm right now. There were a lot of investors saying, well, there was no signs of panic. We can't have a bottom without panic. And this to me tells me that we have hit that panic phase. Now, what's really difficult is we're in the eye of the storm right now. And it's kind of one of those situations, like let's say you want to sell all your assets right now. It's almost like an insurance policy. You want to buy your insurance when, everything is good. Your house is in good condition, you buy homeowners insurance. And then, God forbid there's ever a, fire or something like that, you're protected. Well, the VIX Futures Term Structure being inverted pretty much tells you we're in a fire right now. So I know there's the big temptation like, oh, let me buy protection now or let me, sell off my holdings now. But it's really just like we're literally in the eye of the storm right now. The seasonality of the market is going to bottom out in about a week. And imagine just think about it. Imagine 6 months from now, you're looking back and you go, wow, I stayed in the market for 26 days of a sell-off. And on the 27th day, I sold all my holdings literally as the market was 5 days away from a seasonal bottom. That, to me, if I were to do that, it just would not make any sense. And I know when the market's doing this and it's just acting this erratic, every day can feel pretty emotional, right? I mean, look at this heat map. We had Tesla down over 4% today. We had Nvidia down 5%. I have a long position in Tesla right now, along some Tesla call options. So yeah, it can feel like, oh my gosh, these emotions, my money's swinging around and whatever. And I definitely think if you're in that camp where you're experiencing that, it's good to just take a mental account of oh man, I guess I had too much risk on into this event. Or maybe I'm betting my lifestyle and my trades. And you want to make sure you're never really betting your lifestyle. Because that's where trading gets super stressful. we never want it to be stressful. Like even if we have a losing sequence, it's okay to lose, but we don't want to be like stressed out. Because I'm definitely sensing like, and this is just par for the course, like during these kinds of sell-off events, people do get stressed out. And for me, like, with Pristine Capital, the trading group we have, these videos that I'm putting out for people, I just want to make sure that everyone is okay. Like for me, it's kind of crazy. Like I'm fully long the market right now. Today I took a drawdown, but for me, it's like, oh, this is kind of just par. I don't win every trade I put on. I don't win. It's all good. But what really does get me, stressed out or honestly just feeling bad is like when I get, I've had a bunch of like family members reach out to me and they're like, oh my gosh, I'm about to like pull my money out of my retirement, stuff like that. That does bum me out because that's like, oh man, like people are really getting hurt out there. So yeah, just always be cognizant of what you have on. And, let's say if this sequence you're kind of having a rough go of it, use it as a learning experience. Because, like, again, it is pretty tough to, like, we can't change the past, obviously. We're in the eye of the storm. Is the risk reward, like, let's say, for example, I see a lot of people, they're talking about, I think the S&P 500, could go to 3,500. Think about it. Right now, we're at, like, what, like 3,750, 3,780. We have, like, 250, 280 points of downside. If we look at the upper end of the range that we've been trading in for the last like 6 months, it's at about 4,200 on the S&P 500. So we've got maybe 280 points of downside and maybe 400 or 500 points of upside. It's kind of difficult to justify that. My parents are going on in the background. Let me see. We have our style factors. We have the momentum style factor up 0.2%. International value up as well. We've got our high beta, which was the hardest hit today. In terms of trades, this was the one trade that I did today. I got long these SPY September 23rd at 381 calls for $1.17. Got long those at 946. We'll see if we do end up getting a bounce tomorrow. These could really come into play. If not, they'll be a max loss on this one. And let's see, seasonality. So I'm mentioning the seasonal bottom. Look at where we are in the seasonality, team. Like, look at this. And when you see it, you can't unsee it. Look at where we are right now. The seasonal bottom, and the seasonal bottom comes even earlier in a midterm election year, is pretty much right here. And then look at the end of the year. So would it make sense to like throw in the towel right now, especially if you're a long-term investor? Like, no, that doesn't make any sense. Like there's a lot of emotions out there, but to me, I gotta say, without being able to see the future or predict the future, that just doesn't really make a whole lot of sense. And that's just my personal view. Take a look here. This is the indices. Let's just take a look and see what's going on. And we have, so S&P 500 trading up ever so slightly in the after hours here. Look how extended away from the 5-day EMA we are. Remember, we talk about this on the upside as well. We say, hey, the further extended away you get from that 5-day EMA, the more risk you have. So here we are. Tomorrow's going to be day 27 of the pullback. On the downside, we do have this 3730 level. Could that get tagged? Absolutely, especially on the path the market is on right now. But yeah, we are, keep in mind it's day 26. I was on a Twitter space earlier. This is kind of funny. And there's one guy, I don't think this guy even trades. I think he just, I think he works for a company and he just goes on and kind of just pontificates about the market. He's a pretty nice guy though. But he was saying like, oh, the bond market is selling and they're the smart money. Today we did get a capitulation event in bonds. This was pretty crazy stuff. Look at this. Look at the relentless down sequence we've had in bonds. Since the beginning of August, pretty much a straight line. Now look at this big red candle today. Now it is scary to see a red candle, right? I'm long some bonds as well. But this typically happens, it's almost like an exclamation point on a sell-off where all of a sudden things just give out and move to the downside. I think a lot of investors, they sort of get in their mind like, this is the beginning of a sell-off, look how much it's selling off. You have to look at the path as well. So there's this guy saying, oh, the smart money is bonds and they're selling today. And look at this. Do you think the smart money is selling on day For bonds, it's probably like day 30 or day 35 of the sell-off? Or do you think the smart money was probably selling into this strength, selling up here, selling a little up here, and getting out at the first couple days of the sell-off? That's the main takeaway. This is not smart money selling. In equities, it's not smart money. In fixed income, it is not smart money. These are capitulators and people that, they were probably getting long too early or probably had too much risk. And now, even though the markets are coming in, they're forced to sell everything that they own just because of the price movement. So I never really want to be in that group of investors that are just kind of like, capitulating out. To me, that's just not the move. And I was seeing even like on Twitter, saw some notes people writing, "Oh, I'm getting out of here. This is too crazy." And of course, if you have too much risk on, you always want to manage that risk. But like, I think, yeah, I think people will look back in hindsight and be like, "Oh darn, like I sold when it was low again, and now I'm buying in when it's high." And I think that's just always kind of the nature of investing. I think that's why there's a big moat around what we do. NASDAQ, also, charges doesn't look great, right? We're just moving in this down sequence, moving on high volume. We're getting a little bump in the after hours, but so far nothing. Russell 2000, this was one of the big losers for today. We took out this VPOC. We're trading very close to this Venom S1 pivot. And our Dow Jones, take a look at this. Plus 0.17% in the after hours. Also looking very similar here. Now this was the big divergence. The VIX was not moving. So this is another thing where it's like, we put in a big red candle on the VIX. So that's telling me that, hey, that's at least a positive divergence that we have brewing. The dollar index, take a look at this. Dollar tried to move up to the outside. Or to the upside. This is still technically like, we can't say like, oh yeah, the breakout failed. But it is good to see hey, at least we're getting that red candle. And in the after hours, we're trading in the red once again. Crude oil is trading in the low 80s now. Look at this. So I know now everyone is like, oh, inflation's just run away. It's never going to end. But, I mean, look, crude oil, everyone thought that was going to go to 130. Here we are now. It's at like low 80s. Take a look at this, our Trueflation dashboard. This is, granted, it's probably not perfect, but these guys have a bunch of different data feeds, and they're tracking inflation in real time. Trueflation rate right now, it's 8.85%. That is high, granted, but it's at the lowest rate year to date. As we do these Fed hikes, they're going to start taking hold. As the market sells off, investors get less wealthy, that's going to take hold. I know no one thinks now that we could get a light inflation report. What happens if the next inflation report's a little bit light? Then suddenly everyone that's been panic selling is going to have to buy back in. Finviz heat map, or not heat map, crypto. Crypto's actually pretty buoyant right now. Granted, it's just a bounce. But I mean, equities are down, crypto is up. Crypto tends to be a lead sometimes on these equities. Like I've noticed that throughout the year. So yeah, I don't think you can just say like, oh, Bitcoin's up, so that means like we're just going to have an epic rally. But I mean, if the market was going to crash, would Bitcoin be up 3.26% on the day in a crashing market? Probably not. So time will tell. This market, again, it's always like a page-turning novel. I'm long. I try to be fully transparent as much as I can. And, yeah, I think now it's just one of those times, like for me personally, I kind of just wish I could say, all right, everyone, wake me up in a week. I feel like you could just walk away from the screens for 2 weeks, come back on Halloween, and then reassess. But right now we're just in the eye of the storm. And if you're looking at things on like a minute-to-minute basis, you'll be like, oh, market's not going up, still not going up, still not going up, still not going up. Oh my gosh, it's been forever. But yeah, I think just give it a little bit of time here. Alright everyone, with that said, that about does it for tonight's market recap video. As always, we'll see you all tomorrow.